Well, I've heard what you said. The only problem is there's a lot of misinformation out there when it comes to loan pre-qualification. So this is why in today's conversation, I want to shed light on the whole process. How do you pre-qualify for a large personal loan the right way? If you're interested, I want you to stick around till the end of today's conversation.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower that's stinging in the beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I'm doing fantastic, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about how to pre-qualify for a large personal loan the right way. First, let me define what we're talking about here. Let me give you the overview. What does it mean to pre-qualify for a personal loan? So anytime you think about loan pre-qualification, I want you to think about soft pull. In other words, you are trying to preserve your FICO score, right? You want to have a soft credit inquiry. So no damage to your credit, no 10 points lost, no 5 points lost, none of that. So basically, the lender is actually just checking, doing a soft pull. In other words, they're checking your FICO score without a hard pull. They just want to know if you actually have the right profile they're looking for. So they'll let you check things like estimated APR and loan amounts without affecting your credit score. Okay, so what do you need to pre-qualify for a personal loan? Well, you have to put in your desired loan amount and loan purpose, very important. The use of loan proceeds, what you're going to need the money for. Your monthly net income and asset information. When we talk about assets, we are talking about lien-free assets. In other words, a car that you own, not a car on which you have a car loan, okay? And so they want to have your contact information, including your home address and phone number. So, and in some cases, they might want you to input your identifying information, such as your date of birth and the last 4 digits of your social security number. So this is all you need, okay? You don't need anything else. It's very important to understand that you got to provide the lender with some basic information so they can do the soft pull, okay? Why is it important to pre-qualify for a personal loan? I've said this before. You just want to preserve your FICO score. That's the bottom line. And that's the first thing. That's the most important thing. And in some cases, if you have a relationship with the lender, let's say you have a relationship with a bank or a credit union, if you pre-qualify for a large personal loan, you are one step closer to being approved. Remember that when it comes to actually doing the qualifying you for the personal loan, they're going to do a hard pull. Pre-qualification does not require a hard pull, but qualifying you for the loan, in other words, approving you for the loan, will require a hard pull. Second thing is you need to pay attention to, after the first step was understanding what pre-qualification means. Second thing is you want to check your credit score and work to improve it if necessary. It's really important, okay? Even though you're not getting your FICO score looked at when you are pre-qualifying, you got to have it ready for the actual loan approval. And this is really important because I'm talking to you here because we hear a lot of misinformation out there from people telling folks that, hey, listen, once you pre-qualify for a loan, you're going to get approved. No, approval is not guaranteed. Boss, I'm talking to you, father, mother, mom, dad, I'm talking to you. It's important. So if you're pre-qualified for a personal loan, you need to understand there is an additional step that you have to actually take to make sure the loan is yours. So you want to constantly work on improving your FICO score. Okay. And when we talk about improving your FICO score, we are referring directly to the 5 important elements that constitute a FICO score. 5, but 2 of which are the most important. So first, you want to always pay your bills on time. Cuz, niece, nephew, I'm talking to you. Don't you walk around and tell me, oh yeah, I forgot to pay my bill this month. I don't want to hear none of that. I don't want to hear none of that. Okay. You want to pay your bills on time all the time. You know why? Because your payment history accounts for 35% of your credit score. We're talking 35%. And late payments, guess what? They can stay on your credit reports for up to 7 years. 7 years. You don't want to risk that, okay? So always pay your bills on time, all the time. The second thing is you want to reduce your credit utilization. We are talking about making sure your CUR, credit utilization ratio, is below 30 to 35%. Okay, remember that your credit utilization is the amount of credit you've used divided by the amount of credit you have available, right? And so when you think about, and this accounts for 30% of your FICO score. So when you add up 30% to 35%, right off the bat, you can see that those two elements constitute nearly 2/3 of your FICO score. And then you have, so you want to constantly review your credit reports. Okay, if you see anything derogatory, anything adverse on your credit report, you want to fight it. You want to dispute it. Okay, so here is a winner strategy for you. A winner strategy. Always make sure you check your credit report at a website called annualcreditreport.com once a year, or you can sign up for free credit monitoring services such as a Credit Karma, NerdWallet, Wallet Hub. And if you see anything adverse, anything negative on your credit report, you want to fight it systematically. The key word here is systematically. Now, number 3, if you want to pre-qualify for a large personal loan the right way, you want to basically take care of your DTI. Okay, the whole thing about the DTI, the debt to income ratio, is that the lender wants to see your debt payments relative to your income. Okay, and the funny thing is, a lot of folks just say, you know, I'm making a lot of cash, I'm just making money, but you realize all of a sudden they file for bankruptcy. You know why? Because their DTI is very high. That's why sometimes we see a lot of those athletes, you know, those millionaires, they have a multi-million salary packages, and then you realize all of a sudden they went from living in a mansion of 5 or 10 houses, or in 10 rooms or 20 rooms for that matter, and they go from that living in a mansion to being homeless. What's up with that? Well, what's up with that is that their DTI all those years was high, has been high. So your debt to income ratio is very important. If you're making a lot of cash, but you're spending as much, your DTI is not going to be low. You want to keep a DTI below 30 to 35%. That's the healthy zone. If you go to 35% to 50%, that's still reasonable. But above that, you are in trouble. Okay. So if you want to calculate your DTI, just take your monthly debt payments divided by your monthly gross income. Very simple. If you're making $10,000 a month gross income and you are paying $3,000 in monthly debt payments, your DTI ratio is 30%. 3,000 divided by 1,000, about 10,000 multiplied by 100 to make the percentage. This is very important. So you don't want your DTI to be high. Boss, I'm talking to you, okay? Here are some pro tips. Always live within your means, okay? Whenever you always trying to have you want to have a rainy day fund, you want to have an emergency savings fund, you want to make sure that you know, if you have to eat out every week, just eat twice a month. Okay, you want to reduce those shopping expenses. A lot of things you can do, and that will put more cash in your pocket. And that's the situation, that's the scenario we want to have for you. Okay, big decision time, boss. Big decision time. What is your DTI right now? Talk to me about that. Do you even have a clear idea of your DTI? Because a lot of folks walk around all their lives having no idea of their DTI. And then they realize, oh, wow, I can't believe anytime I apply for a credit card or a loan, my ass gets denied. Well, your ass gets denied because you haven't taken care of your DTI. All right. You think you probably have a 700 or 750 or 800 FICO score. But anytime you apply, your ass gets denied. A DTI might be the reason. Might be the reason. I want to talk to you about your bank. Cuz, are you still there with me? All right, I'm still having a conversation with you today about how to pre-qualify for a large personal loan with properly, okay? What's the question? Danielle? Yeah, I'm listening to you. Oh, the question is, yeah, that's what I was about to talk about. You want to establish a relationship with your bank. So when we talk about pre-qualifying for a large personal loan, it's important to start from where they know you, right? you want to consider pre-qualifying for a large personal loan at your bank or a credit union. What I'm trying to say here is very simple. If you are with Chase, I mean, Chase doesn't offer personal loans right now, but let's say you are with Wells Fargo. Don't you try to pre-qualify for a loan at PNC or US Bank for that matter. No, you really want to start where you are, okay? And you want to be on the lookout for offers. We're talking about loan pre-qualification offers, okay? And while you're doing that, you need to actually strengthen. You want to reinforce your banking relationship with your financial institution. For instance, if you are with the Navy Fed, you want to deposit more money with them. You want to set up direct deposit with them. You want to do everything. You want to open a savings account, a checking account, okay, an IRA. You want to open a share certificate, whatever you can do to deepen the relationship with them. Do that, okay? Pay down credit cards you have with them. I'm still talking about your bank, okay? This is how you can beef up the relationship with your bank. You want to pay down credit cards or other credit products you have with them, and set up direct deposit. Direct deposit does fantastic things. It proves to your bank that you're working, right? It proves to your bank that you are paid twice a month or every 2 weeks or every week or whatever, okay? It also tells them, very, very important, your employer's name, okay? Money, 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 money. So, boss, I have a question for you. Have you set up a relationship with your bank right now? How much money are you keeping in your account? Are you keeping peanuts, or are you keeping, a healthy 4 digits or 5 digits balance? This is important. This is going to help you pre-qualify for a large personal loan with your bank. Okay. Remember that banks have algorithms that automatically scan through clients' account and see clients that have a positive financial situation, a positive net worth, and those are the clients who get the pre-qualification offers. Whether it is credit cards or large personal loans, that's what it is. Next thing you want to do, you want to actually look for lenders, okay? If you're not really lucky with your bank, guess what? There are a lot of banks out there who want your business. So you want to research lenders for your credit band, okay? Your credit band, are you in the 600s? Are you in the 700s? Are you in the 500s? Always look for lenders for your credit band, okay? So if your current financial institution doesn't fit, seek online lenders like Avon or loan marketplaces like Lending Tree and Lending Club, okay? Because remember, at the end of the day, and that's the sad truth, not every lender will be a good fit for you, okay? So this is what it is. You're not going to change it. If you're a borrower with poor credit, you want to be in your credit band. If you're a borrower with fair credit, look for banks and other lenders in your credit band. It's very important. And so remember, if you have poor credit, just expect to pay more in terms of APR, right? So as a bad credit borrower, you could also consider borrowing from a credit union, your local credit union, which knows you more, okay? And so the whole thing is you have to be very careful here. So when I talk about lenders, you know what lender actually will fit your situation. Why? Because depending on the state you live in, unless you go to a national bank, there are some regional banks, there are some community banks, there are some, I think, tier 2 and tier 3 banks. There are some local credit unions and there are some national credit unions. So you have a large constellation of financial institutions to select, to actually pick from. It's just all about making sure whatever you choose at the end fits your personal situation. So the decision here is very simple. If you want to choose a lender, first look at your geography. Then you want to look at your own financial situation. I'm talking about your FICO score, your net worth, okay? And then you want to study their terms. I'm talking about their APR, right? I'm speaking about their fees, whatever fees they have, and I'm talking about their maturity, their loan terms. And if those things actually are amenable to you, if they are appropriate for you, if you can actually work with them, then go ahead and apply. Okay, and first seek pre-qualification. And once you get the pre-qualification, go ahead and apply. I'll be right back right after this. Don't go anywhere.
Finest, mystic killer, and call me señorita. Ay, papi, got me dreaming. My legs up on the ceiling. Oh yeah, yeah, yeah. I know when he come, he ain't never gonna leave. No. Hit it the night run, and that's the way I wanna be. So don't think I'm the one to won't ever be enough.
Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are also having a conversation today about how to pre-qualify for a large personal loan the right way. So now let me talk to you about some actions. In other words, what should you do after you are pre-qualified? Okay, so this is very important. So the good news is you are one step closer to approval. Okay, so while pre-qualification is an excellent tool for comparison shopping, it doesn't guarantee that you'll be approved for a loan. I've actually said that before. Okay, and Tanya, yeah, I'm going back to your question. So this is what it is. Pre-qualification doesn't mean loan approval. Okay, so you'll still need to submit a full application. What was that? No, yeah, definitely. I'm still talking about that. So you got to submit a full application, upload the supporting documentation, and consent to a hard credit inquiry. So Paul, I'm actually coming back to what you asked before. You have to consent to undergo a hard pull. Okay, and the lender is going to ask you that, and you have to give him or her your approval. Otherwise, you're not getting the loan. Okay, so once you've got your offers, you want to compare details like interest rate, APR, fees, and repayment term to determine which one is best for you. If and when you find a pre-qualification offer you like, you can move forward by submitting an application directly with a lender. Now, remember though, this is important. People actually get it confused. Don't get it twisted, okay? Every lender has its own process, but you likely need to provide personal information, proof of income, and other details. And the lender will verify your information, and assuming everything goes smoothly, it will approve the loan. So once the loan is approved, the lender will likely disperse the funds to your bank account. So if you are consolidating debts, what will happen here is that the funds will be sent directly to your creditors to pay off your debts. So here is the approach I want you to follow. First, you can go to a bank and see if they have a loan pre-qualification link, or you go to a loan marketplace, or you go to an online lender, right? Such as Avant, such as Lending Tree, Lending Club, and all that kind of stuff. They have a pre-qualification process in place. Once you go through that, you enter your information. You want to compare, okay? Compare all the offers you have, and then pick the right one for you. Before I close today's conversation, let me give you a few pro tips. So we are still talking about how to pre-qualify for a large personal loan properly, okay? One thing you have to understand is that you can do everything to be approved for a loan, but sometimes things are not rosy, okay? So what if you cannot get pre-qualified for a personal loan? Well, if you go through the pre-qualification process and you are turned down for a loan, you might not be sure what to do next, right? It really depends on a lot of things. So here is what you need to do. First, you want to ask the lender what happened. It's important. I mean, reach out to the lender directly. I mean, sometimes it's just better to have a conversation and you have a clear idea of what happened. Ask them to give you an explanation of why you were turned down. It might still be possible to get approved, or if not, you can use this insight to improve your chances for the next time. Okay, remember, I told you, algorithms, they actually check a few data points, and if those data points are actually if they match, then they will approve you. If not, that's what it is. So you want to also check your credit report and score. Okay, it's important. You can check your FICO score or your Vantage 3.0 score. Okay, your Vantage 3.0 score is kind of cool also. Okay, and you have to remember that lenders commonly rely on FICO when determining whether you qualify for a loan. Okay, so you can go for a free credit score, or you can actually pay for them. Okay, and also explore alternative options to a personal loan. I mean, you are probably putting all your dreams on a personal loan. It doesn't matter if it doesn't work. Diversify. As my grandfather used to say, don't put all your eggs in the same basket. Okay, so look for things like credit card balance transfer, or you have a line of credit, or you have a credit card with a 0% APR intro period, depending on your situation. The whole thing, if you need money, find other ways to get the cash, or try applying with a cosigner, right? If the lender allows you, you want to add a cosigner to your application, because this could actually boost your chances of qualifying for a loan. You can actually get a better rate also if the cosigner has strong credit. Okay, so credit card. So your credit card strategy should be one point. Obviously, we are speaking about loans here, but the credit card strategy should help you actually improve your CUR, which in turn will improve your FICO score, which in turn will help you actually boost your chances of pre-qualifying for a large personal loan without a credit check. Thank you so much for your attention. I really appreciate it. In today's conversation, I explained to you how to pre-qualify for a massive personal loan the right way. So I gave you an overview about the process, explained the importance of FICO score, DTI, your bank, all lenders, the action you should take, and the pro tips. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.